Good afternoon, everyone. Today is Monday, the 4th of February, 2013. This is Brian Shannon from AlphaTrends.net speaking. We had the market down. S&P was lost 1.1% here today, and we got down to really actually a pretty important level in the S&P 500 that makes me think that we should be a little bit more cautious near term. That 149.50 level is a level of support that we've been looking at as it was tested last week, and in the weekend video I said basically we wanted to see the market hold in here. This is our band of support between 149 to 149.50 that we wanted to see hold, and getting into this area would make us once again become more cautious. Well, now we have this market below a declining 5-day moving average, and that's not a good thing to see. So I think that if we get as long as we remain below that 5-day moving average, and let's just say about 150.35, that we need to maintain a high level of defensiveness here. Today we had 2,400 declining stocks and just 640 advancers, so 4-to-1 decliners, and it doesn't seem as though maybe this time it's going to hold in here. I'm just going based on a little bit of gut. The proof isn't there yet, so keep that in mind. But we've got down support that should be found down to about 149. If that fails to hold, then I think we need to back it up to the daily time frame and say, what's been an important level in there, and really down even towards 147. Now I know that's pretty far away, and before we would be able to get there, we would have the highs from last year coming in at about 148 and a quarter, near that 20-day moving average. So I think the key levels that we break, that if we break 149, that we want to look at about 148 and a quarter, and then perhaps down as low as 147 and change is what's possible for this market. The year-to-date volume-weighted average price would be interesting to see as well. So since that gap higher, 148, and that might help provide a little bit of support for the market. Just another piece of information that kind of lines up in that 148 area. It's definitely not a level that if we break down to it that you would want to just blindly buy into. You have to look at shorter term time frames to see if there's actual evidence that the buyers would be gaining control. So what we would like to see, I think, really for tomorrow would be maybe a little bit of strength in the morning, and then to break this level with conviction, and then we'll see a little bit further sell-off. Otherwise, we want to wait for it to get back above 150.35. The Nasdaq was down 1.74% today, and right down towards the low end of that range as well. The range has really been, the support has been 66.17 is this low into about 66.5. So we're basically at that level in here. The low again 66.17 into the 67.5 area. This is what we've been calling support. So we're back into that range once again. It looked like maybe we had the potential to get going above that 67.80. Of course, that didn't happen. It turns us more defensive. Now, I think that a possibility is that we could actually take out this low for the year at 66.17 and then come down towards that rising 50-day moving average, which is currently at about $66.06. And the catalyst for that, I think, is likely to be Apple. We were talking about Apple, and what I said over the weekend was I was looking for and kind of hoping that what we would get is that we would take out the low of 435, the low that came after that earnings gap down. And that occurred, the earnings gap down, what we were talking about Friday was that we were at an interesting level because this was the volume weighted average price in this 452.5 area since the gap lower. And now we're clearly below that, meaning that the average price that the stock is traded at in the normal market hours has been about 452, and here we are down at 442. So it tells me that a lot of the people that have been buying as a bottom fish are losing money since that gap lower, and the low was $435. Now, what would be a good thing to see would be is if we were to kind of get a little panicky sell-off first thing in the morning below that 435, and it would be important to take out 435 because 435 is most likely an area that a lot of people have their stops just under, and that would bring about some further selling. I don't think, though, that we're going to see heavier volume on another on a test or a break of that low, and that will indicate to me that the emotional money is kind of out of the stock, and it's going to be in a position perhaps where it could advance. That is to set up a nice bounce trade, the one that these people were looking for. Again, it was a pretty feeble bounce that we had seen from that 335 low, but this next one could set up a bigger bounce. We had the stock come right down to daily S2 today. It remained below that volume weighted average price throughout the session, and I think again taking out 435, you don't just buy it below there, but you start to watch things like the 1 minute volume weighted average price, and then if we are to, let's say tomorrow we're to, here's where we close. Let's say we gap down and take out 435. Let's just call this 435. We take that out and then kind of go like this and get back above the volume weighted average price at this point. Then there could be a purchase in there with a stop either under the low of the day or whatever that higher low is. It's tough to say exactly what the stock is going to do, of course, and these are the things that we're going to be discussing in the Alpha Trends chat room tomorrow to see if perhaps this trade does set up, or and how to manage our risk, so that if a high risk bounce trade like this does present itself, that at least if we get involved and the trade doesn't work, we're not going to take a big loss. Let's take a look at the Russell 2000, which was down $1.09 today, or 1.2%. We know that 89 has been the key level in there. 88.75 to 89 is what we had said over the weekend, and it looks like we're in for a test of that. We also have the 20-day moving average at about 88.5. I think if that level is to give way, then we have to be alert to the possibility that we could head back down towards about that $87.80 level. So we have a market below declining 5-day moving average, and it appears as though maybe a little distribution recently, and this could be one of those. From a failed breakout comes a fast move lower. You have to remember, again, the big news was the Dow closing over 14,000, and people calling at, well, let's take a look at the Dow, by the way, people calling that a new bull market. Well, it's obviously not a new bull market. This market's been in an uptrend for the last 4 years since it made these, the 2009 lows, and now we're getting, confirmation of a new bull market. It just isn't that simple. But in the Dow, I think you get this market back down about 13.8, then that's where we could see some, further erosion in that. Let's go back to that Russell 2000 really quickly, though. Again, I think we have risks this week down towards about $87.80. Semiconductors, we wanted to see them hold above that 3460 level. We were saying that this is the band of, this prior little band of resistance, 3450 to 3460 should become support, or we would like to see it become support. And we still have a rising 5-day moving average, but we're going to test this trend line here, and I don't think that the semiconductors are likely to get smashed from here, but just keep your defenses up. And the financials, of course, we know have been at multi-year highs, and we're starting to see in this market as well that we took out that range. The range that we spoke of last week was 1730 to 1750. We took that out on the upside. Now we're back down in it, and this also sets up from a failed move comes a fast move lower. The primary trend on the daily time frame is still higher. However, we've had decent runs in these markets, and perhaps we're going to see a little bit deeper sell-off. If the financials break below 1730 and hold below them for more than a half hour or so, I think 1715-ish is very likely. And the overall theme for tomorrow, and I think the rest of this week, is keep your defenses really high. Unless we're to get back up above 1750 in the financials, if we're going to get back above 3480 in the semiconductors, and the Russell 2000 back above 90 for the Qs, we're going to get back above this 6740, 6750 again, and the SPY back above about 150 and a half. Then you have to maintain a very high level of defense right now.